The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Well, I thought we'd do things a little bit differently today. I asked my guest host beside me, Nathan Samsundaram from Deep Data Analytics. Yeah, a winner and a loser from reporting season, and David Lane from Ords was happy to go along with his pick. So we've got, well, drum roll please. Nathan, what was your winner from reporting season?
It's the boring one, Telstra. I think the overall telco sector actually reported relatively well. I think the market is looking for defensive growth. And with Telstra, you've got management executing to the plan. A lot of the competitors are in trouble. You've got decent growth. They're investing into growth. Yield is solid. And that's been the winner. I think the overall sector's done well. Another one out of that bunch is Aussie Broadband. I think it reported pretty well. So they'll be my picks, Telstra and Aussie. Aussie Broadband, I think they're executing well. If you're positive on the all the tech, AI, data center thematic, well, without the telcos, you're not going to get connected. So the telcos will benefit from it.
Has Telstra missed a trick by not being involved in data centers?
I think that's probably a smart move, because what we're hearing from Microsoft is a clear indication that there is an oversupply. The demand hasn't caught up yet. We all have this thematic of if you build, they will come. Well, the CEO of Microsoft, who was one of the early movers into the thematic, is starting to say, well, I want to see revenue come before we add on to the capex. So they're pulling back a bit. And I think they're probably the early players, so they're telling you what's happening in the sector. I don't think Telstra needed to do anything spectacular. There's a fair amount of data centers in play. I think you just got to wait and see how this plays out. They're in an area where they're dominating the market. They're investing to make that even better. And I think they're in a great spot. And, as the thematic works against the banks and money is coming out of the banking sector, you want defensive yield that's going to hold up in the weakening growth outlook. Well, the telco sector is a good play. So the money is rotating into large caps, and Telstra benefits out of that.
David, do you agree? Disagree?
No, I do agree. Yes, we liked Telstra and thought that it came out with a very good result. And yeah, cash is king. Telstra is doing very well. As Nathan said, they've got a reasonable dividend yield, about 4.5%. We think that'll probably rise to about 5% next year. But they've also announced a share buyback, so a $750 million share buyback. And there's a possibility that they can do further share buybacks in the future. Their capital position's looking reasonable, and they're also in the process of, along with News Corp, selling off their stake in Foxtel, so there'll be some more cash that comes in there. So, yeah, I think that Telstra looks very good. Also agree with Nathan about Aussie Broadband. We've got a buy recommendation on them and thought that they reported pretty well also.
All right, so that's 2 buys for Telstra and ABB, incidentally. Now, Nathan, I did ask for a loser as well, and you've been alluding to this sort of re-rating happening in the banks. Is that giving us a clue? Yeah,
look, I think you always get, when banks sector gets into weakness, the regional banks get hit the most. And Bendigo's been leading that. It was smacked on the result, and I think the market was overpaying for banking sector, and Bendigo is flagging what's happening in the sector, and it's a gradual move. I think the rest of the stocks will come through. I think the market is starting to sell into the other banks. CBA is usually the last one that holds up, but it's way too expensive for the yield that you get. I mean, unless you think the CBA is better than US economy, I've got problems with that. So you don't need to be a bank analyst. I think the sentiment is pretty tough. I mean, RBA is not cutting rates because things are great. So I think the banks are going to be tough here, and I would be, getting out of banks. But look, no one cares because they bought it a long time ago. For tax implications, they're probably not going to sell, and that's fine. But if you're putting fresh money,
Bendigo, you would sell though.
Oh, I think Bendigo, you regional banks, you need to get out. If you're in regional banks, you should be rotating. And if you want to keep the banking exposure, you buy one of the big four. I think they will also come down, but the risk is less. But I think regional banks will be a lot riskier in the next 6 months.
Got it. So Nathan's stinker of the season was Bendigo and Adelaide Bank. It's hard to argue with the share price reaction, right, David?
Yes, it is. Yeah, we actually had a lightened recommendation on Bendigo going into reporting season, so probably weren't overly surprised, but were surprised by the magnification of the miss, I suppose. So we've changed our recommendation to a hold, but that's based on the share price decline. It really is a bank that does have a lot of problems, and interestingly, part of the problem that they've got is a very high cost base. So Bendigo was almost subject to the fact that they grew their business too quickly because their net interest margin is so skinny and their cost base is so high that it actually hurt their overall profitability. So, definitely the banking sector is not growing by a significant amount. It is or has been an overpriced area. And, Bendigo is definitely one of those that suffers.
Okay, thank you, guys. So, a winner from reporting season being Telstra. A loser, Bendigo Bank. It's a sell.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.